Good day, I'm Dr.Suresh Rama, Head of Rates and FX Strategy from RHB Group. Today's topic is Dollar Strength. It's all about the 10-year US Treasury yield. We maintain our long-held view that the dollar will strengthen against Asian currencies for much of 2021. When the Federal Reserve starts to raise rates, the timeline will depend on what is happening with the economy. The US economy could recover more rapidly later this year as coronavirus cases drop and more people are vaccinated. Inflation is expected to jump relative to last year on the back of rising treasury yields due to favorable economic data. Ultimately, in the medium term, we expect yields to continue to rise against a supportive fiscal backdrop. A look at the 10-year US Treasury yield against the dollar index shows that in 2017 and 2018, the curve steepened as Fed funds targets rose from 0.5% to 2.5%. In 2019, the curve inverted as easing policy pushed rates lower towards 1.75%. However, the curve inclined again in 2020 and steepened rapidly in 2021 when the Fed funds target rate lowered to 0.25%. The dollar is gaining ground and will continue the momentum faster in Q2 2021 before stabilizing in Q3 and flattening in the final quarter of the year. We believe US Treasury 10-year government bond yields will surprise from the upside in the next few quarters. In Q2 2021, we expect yields to average 1.9 to 2.1%. We maintain our bullish dollar view. We believe global financial markets will be gauging the fiscal and monetary policy outlook over the near term. On US monetary policy, we believe the US Federal Reserve is unlikely to stand in the way of rising long-term government bond yields. We had indicated that the balance of risk is skewed towards global central banks such as the US Federal Reserve announcing some measures to stabilize longer-dated government bond yields. These policy actions could materialize if the upward momentum of yields is too rapid in Q2 2021. We believe continued liquidity injection by the People's Bank of China and downside surprises of economic data in the near term are the key catalysts for Chinese want to trade higher. In our view, the balance of risk is skewed towards a synchronized recovery in growth across major geographies, being more of a second half of 2021 event risk rather than a first half 2021 reality. The ringgit is driven by Chinese yuan fixing levels as well as broad-based dollar strength. We believe the currency has further upside as weaker fiscal projection for this year will act as a drag on the currency. We have revised up our 2021 fiscal deficit forecast to 6% of GDP from 5.4% of GDP. The main revision to our 2021 fiscal deficit forecast is due to an upward revision to expenditure as well as smaller pace of revenue collection given the lower projection of GDP growth of 5.4% for this year. With the risk of a wider fiscal deficit and expansionary fiscal policy stance, the risk is tilted to the upside in ringgit. The technical picture on ringgit shows that the currency faces major resistance at 420. Based on our fair value estimates, on average the currency is expected to trade around 415. We believe if commodity prices stay elevated and revenue projections improve, the currency has the potential to trade below its fair value estimates. Thank you for listening to this podcast and have a good day.